Hello, everyone, and welcome to the second Financial Literacy Committee event. And just to kind of update you guys, over summer, FLC started a podcast series interviewing a CEO of a global IT services company in its first episode. Make sure to check on our website. Today, we'll be talking about passive and active investing with our guest speaker for today, Leka Devatha. Leka is a real estate developer and broker based in Seattle. She is the president of Rehab Homes, which is a company that focuses on residential and commercial redevelopment. She has spearheaded hundreds of transactions and developed around 100 million in real estate. At the end of this presentation, we have a Q&A session. So if you have any questions, there'll be a forms link in the chat so you can write down any questions. And Leka, thank you so much for joining us today and sharing your experiences. Let me hand the floor to you.
Thank you so much, Dhruv. First of all, I think you guys are doing an amazing job. I looked at your website and you and all the people on that are involved, everyone from the CPO to the people that are working on the website, you guys, I'm just so impressed with what you guys have done. So really good job on that. I am excited to share you with my network and have everybody else see that even as a 10th grader, you're thinking about money and the importance of money and the importance of financial freedom, which is super fun to watch. Okay, so today I thought I would share a presentation for you guys. First of all, my name is Leka Devatha, and I actually grew up with Dhruv's mom in a city in India called Bangalore, and moved here about 16 years ago. And so, and about 8 years ago, I started investing in real estate. And since then, I've done a ton of transactions and all kinds of real estate investing strategies. So it's been really fun. So I'm going to share my presentation with you, but here's the thing. If you don't understand something, just raise your hand and ask me a question and I'll be able to answer it right away, because some of these things that I'm going to talk about are quite technical and I just don't know how much you guys know and not know. So just feel free to raise your hand and say, hey, I did not understand that, and I'll go through it again with you. Ready? All right. Okay, so I'm going to talk to you guys about active versus passive investing when it comes to real estate. Okay. Let's see. I'm going to go through a quick introduction. Dhruv already said most of it, but here you go. I started a company called Rehab Homes back in 2014. And since then, again, like he said, I've done hundreds of transactions. I host a networking meetup for other real estate investors in Seattle. It's called Real Estate at Work. I'll share my meetup details with you guys at the end. And if you guys want to bring your mommy and daddy, you want to come for it, feel free to come. As a real estate investor, I've done many different kinds of projects, whether it's fix and flips or long-term rental properties or multifamily, which is like big apartment buildings. I've done them all. I'm also on the advisory board of a lending company that lends to investors. Like banks lend to, someone that wants to buy a single family home, whereas we lend to an investor that wants to buy an investment property. And I'm also a real estate broker and I help people buy and sell homes. All right. So what is active real estate investing, right? Now, before I go into that, I want to basically talk to you guys about why it's important to know the difference between the two and what even are the two forms of investing, right? Active investing is something that you do almost as a full-time job, right? You are putting in so much work. You're involved in the whole investment process. It's not something where you're like, okay, I have this much money. I'm going to put it and I'm going to buy some stock, right? and then let the stock go up and me make some money. This is not like that. You're actually buying an asset. You are either fixing it up or you are putting in renters, and you're really increasing the value of that asset. And it's all because of the time and effort that you put into it. That is active investing. You're really engaged in the process, right? Now, there are some really popular forms of active investing, and that I'll just go through a couple over here. First is property flips. Now, do you guys even know what a fix and flip is? Dhruv?
No, I'm not very sure. It would be great if
Okay.
you explain.
Okay, so here we go. A fix and flip, when it comes to real estate investing, is you buy a super old home, right? You buy a home that was built either in the 1950s, sometimes the 1900s. And you take it on and you fix it up, which means you reconstruct everything inside the house. You fix up the bathrooms, you fix up the house, you fix up the electrical, the plumbing stuff, all of that to make it like almost a brand new home. You paint the exterior, you paint the interior, you put in all new kitchen, the flooring, new roof. You do all of that to make it absolutely brand new. And then you sell it as a new house, right? You're buying a really old asset. And I'll show you some examples of how I flip homes, because you buy an old asset and then what you do is you fix it up and you make it something brand new, and then you sell it for a much higher price. Okay, so then there's something called wholesaling properties. Wholesaling properties are where you don't even have to own the property. Okay, you find a property that is super distressed, and then you say, you know what? I know Leka. She does a lot of fix and flips. I'm going to take this property to her and maybe she can fix it up because I don't know how to fix it up. So then you would bring the property to someone like me, and then I'll buy it from you. And so all you did was you had a property that you saw was a distressed property, and then you gave it to me, and I give you a fee for finding that property. That's called wholesaling. Then the third kind, very, very common kind, is you see, I'm pretty sure you see subdivisions in your property or someone building a house. So it's really basically building ground up development, or, someone has a single story house and then you put on another addition on it on top of it. That's increasing the footprint, that's making the house bigger. So that's another way of investing. Okay, so as a high school student, why is this important for you to learn active versus passive investing, right? We're all given an education. We all go to school, then we all go to college, because once we're done, we want to go out and get a W-2 job, right? We all want to go to corporate. We all want to go get tech jobs or become doctors, become engineers. We want a paycheck, and that's why we go and get a job. Once you get a paycheck, which is active income, which is exactly what this is, right? Because this is basically you going out, working every day, and then getting paid for the amount of work you put in. That's active income. Once you have your active income, why it's important to know about passive income is the way to grow your wealth is by letting it grow even in your sleep. Did you guys get that? The way to grow your wealth, right? So one day you're sick and you can't go to work, you can't go to the office. You need to have passive income that's growing even when you're not working. So we're going to talk about that next. But Neil has a question.
So say you're flipping a property, right? So you buy a property and it needs new cabinets, new tiles, whatever. And say you tear down cabinets for like 10K, right? How do
Yeah.
you calculate how much market value that would add to the house? So like if I put a new, refurbished cabinets, everything, how much value that add to the house?
Yeah.
How do you
So
calculate that?
first, are you also in high school? Like, I'm just trying to understand who the audience is. So tell me a little bit about what you do.
Oh, sorry. Yeah, I'm in high school. It's
Okay,
just like a
awesome.
general question, right? Just,
Yeah, yeah, yeah,
it's
yeah.
just, yeah.
Okay, so here's what's sorry, that was not okay. So here is what is cool. When you buy a distressed property, the way you comp it, the way you see, okay, if I buy this property for 600,000, it's going to sell for $1 million, right? The way you do that is by going into the market, like on a Redfin or Zillow, and looking at other properties that are similar in square footage, similar in bedroom, bathroom count, and then seeing, okay, what is a property like this, which is a newer property built maybe in 2015 or 2016 or 2020, what does that sell for? And then you're like, oh, wow, that sold for $1 million. It's the same 2,500 square foot house where this one is 600K, that one sold for $1 million. So there's a $400,000 spread, right? But there's also holding costs, there's selling costs, there's buying costs. Now you take all that away, say there's a $200,000 spread. Then you want to say, okay, if there's a $200,000 spread, I want to make a profit of 100,000. So I'm going to fix this house up for another 100,000. And how you divide up that 100,000 into different aspects of that house depends on how old the house is. What does the house need? Like, is the roof leaking? Are the cabinets bad? Sometimes you don't have to replace the cabinet. Sometimes you do. So, and then there's no like set, like, okay, if I put $10,000 into cabinets, I'm going to get back 20,000. You have to look at the overall house, right? If I'm going to fix up this house for 100K and make it look really nice, what is it that I can really sell for? So I'm going to give you actually an example of a house that I fixed up that you can take a look at. Like, you can see all the befores and the afters. And this is a very, very active kind of investing because I was there every day. I bought the house. I was there with my contractors. I fixed it up and I sold it. So very active. Okay, here we go. That was my mistake, sorry. You just have to see it all over again. People say I'm not gonna change, not gonna change. I know that you like that, you know where my mind's at. Can't be tamed, I'm not gonna play, not gonna play. Oh no, I am like that. I'm a wildcat. Baby, break my heart, give me all you got. So that is a fix and flip where you saw the before and then you saw the after and you see a difference. So I bought this house for 750,000. I put in about 125,000 into it and then ended up selling it for 1.1 million. So it just, but it took a lot of work. So I'm going to go over a couple more with you, just so you get an idea for, the before and the after. This is another fix and flip. Like if you look at the photos on the left, super distressed property, but we made it look like the photos on the right. And that takes time and effort and it has to be quick, right? So it's very, very active. And this is one kind of active investing. Here's another project. This is a house in Redmond. Again, fully distressed on the left, fully fixed up on the right. Here's another one. This one was a house in Bothell. And this one was also kind of a crazy project, right? Like it's super old and distressed on the left, completely cleaned it up and made it super pretty, like on the right. This was the smallest house that I fixed up. It's 500 square feet. But, at the end of the day, we made it look super cute. So that brings me to passive income, right? Passive income is literally my favorite kind of investing because once you have it all set up, you don't even have to think about that asset anymore, but it's going to make you money in your sleep. You could be in India, you could be in Bora Bora, you could be wherever you want to be. Your asset is making you money. Okay, so like you all have to think about, okay, I'm in school, I'm going to earn a paycheck. Once I earn that paycheck, I'm going to spend some, I'm going to save some, I'm going to invest some. You can invest it in stocks, which is totally passive. You can diversify into real estate, which is a really good diversification, because sometimes even when stocks tank, real estate prices are always going to go up. Something maybe cost like $27,000 in the 1990s. Today, that asset is close to $3 million, depending on the location. So real estate is where you make money, but you make money slowly. It is building generational wealth. If you go back and ask your parents, like, hey, did our grandfather, did he go and buy property for us, right? And how did that appreciate? Like, what did he buy that land for? How much did he put into it? Like, how much did that house that he bought for back in 1950 or 1960, right? How much is that asset worth today? And you'll see that real estate always appreciates. So it's a really good asset to own, but it's not necessarily one that you can liquidate quickly, or you can sell and make a profit quickly. You have to wait. It's like the longer you wait, the more money you make. Okay, so what is passive investing, right? It is a way of generating income through real estate. It can take longer to see returns from a passive real estate investment, especially compared to an active investor who does like flips or, generates income consistently and over time. So some of the ways to invest in real estate passively is through something called the REITs, which is really like a mutual fund. It's like a stock. You put money in it. That REIT goes and invests in real estate, and then that investment grows over time. And so you get money over time. Yeah, go ahead, Neil.
So this is like another, so it's like weighing, would you rather buy land or like a real estate property, right? Because if land, say there's like 3-acre land property, right, for like 50K, and there's a real estate, there's a house for like 200K. Would you rather buy the land and subsidize the land, like add roads, add water, add sewer, and then sell that to a builder? Or would you rather just revamp a home? Because they could end up being the same cost, right, with less of the headache.
Yeah, but that's why it is so important to know the difference. And I'm going to talk about this between active and passive income, right? So one is super active. You're buying a piece of land and then you're doing all the work. That's active investing. The second is you're buying a house that's already built up, that you're just going to rent out, and you're going to start making money from day one. So which direction do you want to go? Like, say you're super young and say you're like, I have a lot of time ahead of me. I'm going to buy land in a pretty rural part of a city, which I know that the city is going to grow. And you keep that land for 20 years and the city grows around it. Suddenly your land that you bought for 50,000 in 20 years is worth maybe 5 million. So it just depends on the kind of investing you want to do. And with land, you're going to see the profits, the benefits much later. Whereas with a single family home, you can see it the day after you close, you can have tenants in there, they can start paying you rent, and you can start making a paycheck. So it just depends on the kind of project you want to take on. Okay, so 3 ways to invest in real estate passively. We talked about REITs. The second is real estate investments or syndications and funds. So I do this a lot, where I go and I buy, say, an apartment building. That apartment building cost $10 million. I don't have $10 million to go spend on this apartment building, so I get a bank loan. And the bank only funds up to 70%. So they give me $7 million, but I still have to raise $3 million of capital to go buy this apartment building. So then I go out to the public and I say, hey, public, I have this amazing apartment building that I want to buy, but I need money to buy it. Would you be interested in basically investing in my apartment building? And that's how I gather my investors and I raise the additional $3 million. So if I'm doing, that is me being a passive investor. Say Dhruv's investing in my apartment building, he is my passive investor. So that is me being an active investor. If Dhruv's investing, like he just says, hey, Leka, I have $50,000. I want to put in your apartment building and I want to forget about it, right? And whatever returns I make over time. So he is then a passive investor, while I am the active investor. Now that comes, that is a really good way of investing when you first, when you first want to start investing, you don't have that much real estate experience. You want to find other experienced investors and then go invest with them. And now that brings me to my absolute favorite kind of investing. It's called the buy and hold method. And the buy and hold is cool because it is part active and really part passive, and mostly passive, I would say. And here's why. So I'm actually going to go through a case study with you of a buy and hold investment that I personally made, to kind of give you an idea of the different aspects of it. So this is a fourplex that I bought in South Seattle in a neighborhood called Auburn. And I'm going to walk you through my absolute favorite kind of buy and holds. What is a buy and hold, first of all, right? You buy a rental property or you buy an investment property. So you buy a single family house, you buy an apartment building, you buy a triplex or duplex, and then you hold it for long-term appreciation and also for cash flow. Two super important metrics, right? What is appreciation? Appreciation is the value of a property that goes up year after year, given market conditions. Like our market has appreciated, I want to say 30 to 40% every year for the last 5 years. This year, it has gone down with inflation and interest rates and all those market changes, but our market has appreciated a lot, right? So that is appreciation. So something that I bought, like say in 2017, has basically doubled in value, even with me not doing anything to that property. That is appreciation. What is cash flow? Cash flow is where you have a property, say that you're renting to a tenant. So it's a single family house in Sammamish, and you have a family renting it. Now they're paying you $4,000 to rent this house. Now you have a mortgage on this, right? Someone's paying a bank loan off, and that mortgage is about $2,500 a month. And this family is paying you $4,000. Suddenly you're making $1,500 a month. And that is your positive cash flow every month. So buy and hold properties are great for appreciation and also for cash flow. So here's a case study that I'm going to go over because, again, like I said, with buy and hold, there are different strategies. One of my favorite strategies is called the BRRR method. Okay, it's the BRRR method. It's BRRR, and then the R can keep repeating. Now, what is the BRRR method of investing? Okay, B stands for buy, R stands for rehab, the next R stands for rent, the next R stands for refinance, and then the next R stands for repeat. And you can repeat this process all over again, which is why the R's never end, the BRRR method. And I'll show you how I did the BRRR method on this one and why it is such a cool strategy. Any questions so far? Awesome. Okay. So buy, right? I bought a fourplex in South Seattle. It was completely distressed and I bought it for $625,000. It's 4 units. Rehab, which is basically your reconstruction. So I reconstructed it for renters and I spent about $180,000 remodeling this entire building. If you can see back here, do you see down there? This is when the units were being remodeled. So doors, trim, flooring, this is when we were doing the remodel. Then we rented it out to 4 different tenants. So we rented each unit for $1,780 a unit. That means the people that rented it out paid $1,700 in rent. Then we refinanced it. What does refinancing mean? You go to a bank and you get a loan to refinance this property. So I had spent about $800,000 on the property. When I went to the bank to refinance it, they do something called an appraisal, where they look at the building and say, okay, this building is beautiful. It's brand new. It's already being rented out. There's a huge amount of rent coming. So we will value this building at 1.2 million, 1.25 million. Imagine I spent 800,000. The bank valued it at 1.25 million. So then when you do a refinance, they give you all the money you put into it, so all 800K back, and they give you a new loan for 800 or 900 or whatever it is, right? That's a refinance. Now you have all this money to go and buy another property. So the BRRR method of investing is my absolute favorite form of investing, because at first, yes, I had to buy the property, I had to fix it up, I had to put tenants, I had to refinance the property, right? That was all last year, done with it. Today, it is an absolute passive investment for me because my property manager takes care of my tenants pay the rent, and then every month I get some money from this property. But also it's an appreciating asset, which means last year it was worth 1.25. This year it's going to be worth 1.3. Next year it may be worth 1.4. So me not doing anything, it's still appreciating every year. That is a form of passive and active investing. So let's talk about which strategy is right for you, right? Now, you as a high schooler is different, but you as an income earner, right? Once you start going to college and you get a job and you get an income, you still have to look at, okay, which strategy is right for me? Even now, okay, here's a really cool story, okay? This girl was actually on the Oprah Winfrey show. What she did, she was 16 years old. How old are you, Dhruv?
I'm currently 14.
Only 14. You have 2 years to do this. Okay. So this girl was 16 years old. What she did was she went on Craigslist and she saw free stuff that was being given away by people. So she started collecting the free stuff and then she started a website. Is Perth here? No. Okay. So she started a website, and what she did was she started selling the free stuff that she got for like $5, $10, $20. Like some were really good. So she got like $100. And then she made $16,000. All she did was get free stuff and sell it for some money. She made $16,000 and she told her mom and dad, I want to go buy a house. So then she went and bought a $70,000 house where her down payment was around $15,000. So she bought this house, she fixed it up with her dad, and then she put it on rent. And she started making income on it. She was 16 years old. She did all this by not spending any of her own money, right? She just hustled, she made some money, and she went and bought a house. It's pretty cool to see. So all of you, you have no excuses. You can totally do this. Okay, so active versus passive income depends on, first, how much time do you have, right? You have exams, you have to study. So you probably don't have too much time to do anything active as of now. What is the level of risk you're willing to accept? Okay, so this girl had $16,000 and say so active income is high risk, high reward. Passive income is low risk, low reward. Okay, because with active income, you make the money up pretty quickly. So if I took on a fix and flip project, in 3 months, I can fix it up, sell it, make a ton of money. But with passive income, it's going to take me time to fix it up, find my tenants, do the refinance, all that stuff like takes about a year. And to appreciate this asset and make as much money as I would flipping a house would take 5 years, maybe 10 years, right? Because I'm not selling it right away. So it really all just depends on how much risk you're willing to accept. What are your potential returns? Now, in an active income, like with a fix and flip, you can make 150% in returns, huge amount of returns in 3 to 5 months. In an passive income, you're looking at making like maybe $100 a month or $200 a month in positive cash flow. And so that can take years. So do you want your money back quick or do you want it slow? Also depends on how you want to invest. And then lastly, what do the current market conditions look like? Are we in a recession? Is the market needing a lot of supply? Does the market have demand to take over the supply that we have? right? If Dhruv's looking for a house and there are no houses to buy, and suddenly a house comes on the market, Dhruv's going to run there and say, I'm going to pay $100,000 over asking for this house. Suddenly, it's a really good time to be selling houses. But Dhruv's looking for a house, and there are 100 houses he can choose from. And there's only one buyer, Dhruv, right? He can go to any house and be like, you're asking for $1 million. I'm only going to give you 700,000. So that means there's a lot of supply in the market. There's not enough demand. So you always have to look at market conditions and say, okay, this is how I want to invest because this is what the market is doing. Any questions? Okay, let's continue. So earlier I said that I have a meetup group. It's called Real Estate at Work. We're actually hosting our very first in-person meetup after the pandemic next week, or the week after that, the 26th. So if you guys are interested, you can go to meetup.com/real estate at work / and then you can sign up. So every time we post a meetup, you can attend it. We also have virtual meetups. And next week, I'm actually interviewing a 22-year-old who has over 100 apartment units. And he started investing when he was 19 years old. So he has a really cool story. So you should come listen to that. Lastly, this is how you can get in touch with me. That's my website. I'm on LinkedIn. You're probably not on LinkedIn, but I'm on Instagram and my handle is just Leka Devatha, my first and last name. So you can always take a look at that. Okay, any questions for me at all? Because that's the end of my presentation. And I hope that I was able to add some value, give you some kind of an insight into how to invest in real estate. If any of you have any questions, always feel free to reach out to me or to Dhruv. He knows how to get in touch with me, and I'm happy to answer any questions for you. Wait, Dhruv, you're muted.
Sorry about that. If nobody had any questions, my team had a few questions for you.
Okay.
Our first question was, what's the most exciting part of your journey so far?
The most exciting part of my journey is all the real estate that I now own. I didn't think I was ever going to be able to own real estate, especially in a market like Seattle. But now I own houses, apartments, commercial office buildings. And it's really cool to look at my portfolio and say, wow, I own this and I did this.
And it looks like we have a question, so go ahead.
Hello. So I was just wondering, you mentioned how you have a bunch of properties in Seattle and the Seattle area. I was wondering if you had any plans of looking towards other areas, and if so, when?
Yeah, I actually have a flip that I'm doing with my brother in Raleigh, North Carolina. I also am involved in an apartment building in Orlando, Florida. Here's why I like to invest in my own market in Seattle. This is where I have my general contracting teams. This is where I am physically present. This is where I have my network. So it's really important for you to build all these up if you're going to invest in a different market. And it's not to say that you can't do it. You 100% can. It's just that you're giving away your power to someone else. And you have to make sure that they know exactly what they're doing. So a lot of times I just like to invest in my own market because I can physically be present to take care of any issues that come about.
Awesome. If any more questions come, we can answer them. So yeah. Anyway, another question that we had was, what would you say is kind of a good age once you start making money, whether it's in college or further on? What would you say is a good age to kind of get started in real estate?
14.
Honestly,
if you are if you're attending literacy clubs like this, if you have parents that are savvy with investing, and you know how to, you can get other jobs, you can make money on the side. And then when you have a little bit of a nest egg, like you'll have a little bit of a down payment, you should start investing right away, because that'll teach you to invest in the long term, whether it's in stocks or in real estate or bonds or whatever it is. I had my first job when I was 18 years old, and I put all the money that I made into a fixed deposit. And that fixed deposit, even not knowing, just kept growing every month. And it would pay for my college, it would pay for my car, it would pay for my phone. So, I would say, like, as soon as you can get started investing, just start investing.
Yeah, I definitely agree with that. That's something I also think is very important, starting as early as you can. One question kind of related to your company, Rehabit. I had what would you say is the hardest part of starting from the ground and building up your own kind of business?
So many things, everything. When I first started my company, I didn't know which direction it was going to go in. I didn't know what I needed. So like every day I would be like, okay, I'm going to show up to my work and then just be like, okay, what do I have to learn today? And as things started coming my way, I'm like, okay, I have to learn about this or that or the other, right? The way to learn, though, is by creating a network. Do you want to be a real estate investor? Go find a real estate investing network and become part of that network. Ask questions, be of resource and be of help. If you want to be a hedge fund broker or you want to go invest in stocks, go, network with people that do that. Whatever you want to do, go find people that are already doing it better than you. So then when you do have those challenges, which in my case were many, I was like, okay, how do I find a distressed property? How do I analyze construction costs? How do I find a general contractor? How do I find a listing broker? Right? I would go and figure it out. So you have to have this kind of mentality that no matter what comes your way, you're going to be good at solving problems. So be the problem solver.
That sounds like something that needs a lot of coordination and time and effort into it. So that's really awesome that you were able to build such a successful business. Kind of tied to that, what would you say is kind of the biggest accomplishments of Rehabit until date?
Okay, so I just bought my first office building, and it's right next to Facebook, Amazon, and Apple in Seattle. We're all on the same street. So I have some really great neighbors. I think that's my biggest accomplishment is I didn't know anything about office, but I bought it. I fixed it up and it's ready for leasing now. And so it's really kind of exciting.
That sounds really cool as well, because you're next to such kind of successful companies. So I think that would also help grow your business. So kind of one thing I kind of wanted to end this event was with, what's your biggest piece of advice for teens to help them build their financial strength now and for the future?
I would say really educate yourself. When I first started, there weren't any podcasts or networking groups, Now there are, like, there's Bigger Pockets. There's so many different real estate podcasts. There's so many podcasts that are based on or geared towards financial freedom. So go and educate yourself, because there's so many different kinds of investments you can do. So which one's right for you, right? And you won't know which one's right for you till you actually hear about them and learn about them. And then you're like, wow, that sounds really exciting. That's the kind of investment I want to do. So when I first started, I didn't know if I wanted to fix and flip or rentals or what. But because I educated myself, I said, okay, this is what's most exciting to me. And then no one is young or old to start. No one is big or small. No one is wealthy or poor. Everyone has, if you have the right mentality, if you have the right hustle and grit, you can do whatever you put your mind to. So just don't let anything or anyone stop you.
I definitely agree with that. I don't see any other questions for today. So A big thanks for everyone who joined this event today. And if you missed anything, this event will be posted on our website as well as our YouTube channel. So make sure to take a look there. FLC also has a lot of other content, such as the podcast that I mentioned in the beginning. We also have articles that are posted every month or so. And that was all. Hope everyone here has a great evening.
Thank you for having me, Drew.
No problem. Have a good evening, everyone. Bye-bye.